natural gas is down 30% in the past 30 days, and this creates a pretty unique wheeling opportunity that happens once in a few years. And this is mainly because we have a not so cold winter, or basically the demand doesn't meet the supply. So we have way more supply in the market for natural gas than the demand can actually meet. So for me, this is how I plan to wheel natural gas. So step number one will be to wait for the end of February. So basically almost to the end of the winter for the most part. And I want to follow the average US temperatures, which I will show you exactly how I do and what website I use in a second. Step number two, if price is relatively low, I want to buy NG futures, probably 2 contracts per every $100,000 in capital. And step number three will be to sell short calls against the contracts. Now, is it going to be at the money, out of the money? It really depends. I will see what is, I guess, the most cost effective for me to, or what will be the most optimal thing to do, because there's many things you can do. I might want to just kind of wheel it forever, right? Or up until price doubles or triples. Or I might just want to be selling at the money calls and collecting a lot of credit and basically guaranteeing myself a pretty good return. Step number four, I will always take profit at 50% of credit, or I will roll out and up if the short call is challenged, which can happen obviously quite a bit. Now, when you wheel futures, it's a bit different because they have expirations. So sometimes when you roll your options, they are going to be rolled into a different future contract, which means you will also need to roll your future contract as well, even though it's not expired yet, and work this way. So it's not as simple, but at the same time, not really complicated. So this is where I look at the average US temperatures. So you can see we have a 6 to 8 day outlook. So currently the temperature is expected to be above the averages, which is obviously very bearish for natural gas. 18 to 14 days is a bit more neutral, as you can see, and 3 to 4 weeks is also pretty neutral, some below, some above, and some basically like near normal for the most part. But 3 to 4 weeks is usually, it's always going to change. 18 to 14 days is what I look at, and 6 to 10 days. 6 to 10 days tends to be the most accurate. So price can really move based on 6 to 10 and 8 to 14 and how it changes from day to day. Right. So currently higher temperatures means less demand for cooling, which means less demand for heating. Less demand for heating, which means less demand for natural gas. And this is why prices have been dropping basically. I think it's almost 30%. Yeah, almost 30% in 32 days, in just over 30 days, right? So it's pretty crazy. And price is getting closer to the $3 mark, which is for this contract, the February expiration. This is pretty low. Now, different contracts have different expirations, or at different prices, right? So this one is 2.8 right now. This is well below the 3. And here I think price has actually dropped even more than 30%. Yeah, so it dropped like 33%, right? So it's relative. But here 2.8 is already a pretty low price for natural gas. But we can see in 2020 we went as low as 2.46, give or take, which from there, obviously this is really the bottom end price, pretty much doubled in the next few years. So you could have wheeled it all along and collect some nice credit, make some good returns, and up until now you could have just kept doing it by holding the asset and keep selling calls against it, and just this is just a money machine at the end of the day, which you can just keep making money indefinitely if you buy it at the right time, which is obviously not some rocket science, but you have to be patient, and we'll see what's going to happen. So when you look at the volatility is also pretty good for natural gas. Even though it went down today, it's still okay, I guess, especially if you're planning to wheel, so it doesn't really matter too much. But at the same time, if you look at if I'm gonna wheel, I'm gonna look at a contract with 47 days, or closest to 47 days. but we'll see. Again, it all depends. It's basically a month from now, or a month and a half from now, which is when I'm going to be looking at opening this position. But I want to be following it very closely, because there might be an opportunity even before that if price drops aggressively to like multi-year lows. So this will be a good time to already start wheeling natural gas and just collecting a nice amount of return. So 2 contracts, let's say we end up selling an at the money call, 2 contracts, and this is in case we we wheel at 2.8, for example, and we want to sell at the money. You can collect about $4,400 in credit for a $100,000 account. This is quite a bit for a really low margin. So this is a lot of money, which is basically for the most part guaranteed. Your only risk is really if natural gas keeps kind of dropping down. But this will be basically guaranteed, or at least half of it, 50% of profit is where I'm going to take my my profits off the trade, because we can just reopen a position much quicker and let Theta Decay do the rest. This is it for this specific plan. I will keep you posted of anything and everything else I'm working on. But this is, I guess, simple, but you need to have a lot of patience and strike when the odds are clearly in your favor. So thank you again for watching. I'll keep you posted, and I'll catch you in the next one.